Good evening and thank you for joining us on this edition of Capital Markets. I'm Temple Ashaju. This week we saw the release of the real gross domestic product for the second quarter of the year by the National Bureau of Statistics. The GDP grew year-on-year by 0.55% to 16.31 trillion naira, and that's the first in 6 quarters compared to 0.52% decline in 15.86 trillion naira registered in the preceding quarter. Now, the return to growth mainly resulted from improved foreign exchange supply in the economy, which led to reduced business costs as well as improved household expenditure. The growth in real output followed from positive performances in both oil and non-oil sectors. As always, the capital market reacted to these developments, closing the week in green across board. But economists, analysts, and even investors have warned of a return to recession if the right policies are not sustained and if crude oil prices relapse. Perhaps it's on this note that the government is not resting on its oars as it takes a step further to issue its first 100 billion naira sovereign sukuk to buffer unforeseen shocks. Beside the review of the market on the program this evening, we'll have the privilege of getting an insight into these Islamic finance and investing options being adopted by the Debt Management Office of Nigeria. But let's get on board with some news that we saw this week, and we'll be starting with the Owando issue, which the SEC gave its comment on, concluded its investigations on. The Securities and Exchange Commission this week cleared Owando PLC of irregularities in its earnings audited financial statement following a petition by some investors. This means the integrated energy firm can now hold its 40th annual general meeting as earlier scheduled for Monday, September the 9th in Akwa Ibom State. In a statement, Owando explains that it has responded to the petition and has been cleared by the SEC after investigations reveal that there are no material findings that could lead to the postponement of the company's meeting. But the petitions were filed by one Alhaji Dahiru Mangal as well as Ansbury Incorporation. Over now to Unilever. Unilever rights issue has ended on Friday, September the 8th. The company had indicated interest in raising 58.9 billion naira through a rights issue of 1.961 billion ordinary shares of 50 kobo each to existing shareholders at a price of 30 naira per share. Now, the rights issue officially opened on Monday, July the 31st on the basis of 14 new ordinary shares for every 27 shares held. And registrars to the offer, Stanbic IBTC has now directed all stockbrokers and receiving agents to remit all necessary documents on or before September the 15th. And the manufacturing sector contributed a reduced figure of 1.13% to the second quarter gross domestic products, which led Nigeria out of recession. Consumer goods listed company Honeywell Flour Mills believes that the scarce foreign exchange is a major factor for the decline. Speaking to Channels Television during a visit to the Nigerian Stock Exchange this week, the chief executive, Mr. Lanre Jayola, says the improved quarter contributed to the next GDP numbers. Let's listen to Mr. Jayola.
Most critical challenge which we continue to contend with has to do with the availability of forex for us to procure raw materials to do business. Fortunately, things are turning around this time around, so we look forward to a very, very bright current financial year, which will end in March next year. Last year, the business posted 53 billion profits, and we are looking at a number far ahead of that, far beyond that in the current financial year. So overall, I believe very strongly that given all other factors remaining okay with the economy, that the manufacturing sector will contribute far in excess of what we recorded this quarter. The reality is that there was a slight drop in the GDP contribution by the manufacturing sector. But the good news again is that things are looking up. There's a lot more dollar availability, a lot more forex availability, pardon me, to the operators. We believe that government, as promised, will continue to support backward integration efforts of players in this space. And with all of this, dependence on foreign exchange for procurement of raw materials will reduce. And of course, what that also means is that we'll be able to do better business, we'll be able to increase capacity utilization from current very low levels to something that is more acceptable by the economy, by investors.